In the last 1 year, India's insurance sector has gone through a barrage of regulatory reforms. And dare I say that it's been an exceptional year. That's because reforms has been the name of this game. From making health insurance more customizable to simplifying the claims process, from making life insurance more simple to creating more awareness and expanding distribution, insurance companies have had to deliver reforms on ground, along with running their business in a very competitive space. Well, it's been a tricky ride and there is still a long way to go. The regulator IRDAI has introduced the insurance industry with the destination at the end of this long road: Insurance for All by 2047. To discuss these reforms and the way ahead, we are joined by Mr. Anup Bagchi, Chairman FICCI National Committee on Insurance and MD and CEO at ICICI Prudential Life, Mr. Prashant Tripathy, Co-Chair FICCI National Committee on Insurance and MD and CEO at Max Life, Mr. Prasun Sikdar, Co-Chair FICCI Taskforce on Health Insurance and MD and CEO at Manipal Health Insurance, and Mr. Mayank Bathwal, Co-Chair FICCI Taskforce on Health Insurance and CEO at Aditya Birla Health Insurance. Let's start the discussion, gentlemen, with Anup. Anup, the first thing that I want to ask you here is that, of course, the regulator has put an ambitious target of insurance for all by 2047. I want to understand from you, as an important stakeholder towards this target, what would be those couple of things which the life insurance companies will have to do in terms of their contribution? And from the regulator, what would be those couple of things that you would expect to reciprocate in terms of your actions?
No, thank you, Yash. And I think it's an ambitious goal, but I also feel that it's a goal that can be met. We have to make the products more available. We have to make products more accessible, and we have to make products more affordable. And to do that, both life insurance companies, our insurance companies, as well as regulator, as well as general ecosystem has to support that. Coming specifically to what insurance companies have to do, we have to basically more and more segment our customers well, get into more micro markets and make our distribution even more in depth, and make sure that there is innovation for every customer segment that we cater to. And so with a population as large as our country, we will have to make more and more innovations around products. But that is not all. Innovations around channels as well, and innovation around services and servicing. From the affordability side, of course, government can do reduce the GST, because if we think that it's an important thing, and the affordability can get partly from government by reducing the GST. We can also make, just like you have 80D for health insurance, one can create, a section where you incentivize a customer, maybe up to a smaller ticket sizes, but making sure that there is incentive for people to protect themselves well.
Well, Anup, affordability and accessibility are going to be the two keywords for the next decade as far as India's insurance sector is concerned. But Prashant, if I could pass the same question to you in a different way, I want to understand the downside risk to this target. What, according to you, should not be done if this target for insurance for all by 2047 is to be achieved efficiently?
We believe that the rural ownership is between 12 to 14%, and out of that, 10% is Pradhan Mantri Jeevan Jyoti Bima, PMJJBY. If you were to look at the penetration in urban areas, it will be significantly higher. Ownership in large cities will be, my sense, upwards of 50%, which means this big delta has happened because the life insurance industry has remained focused for a variety of reasons, mostly around products and distribution reasons in the large cities. And we have focused on getting large policies. We have focused on segments which are more wealthy and could afford. So if insurance industry doesn't change the course and doesn't focus on smaller areas, smaller cities through the innovations of product and distribution, that will definitely come in the way. So we'll have to kind of rewire ourselves, rethink our strategies, rethink our product and distribution to get there, number one. Number two, I think in addition to the 2 points which are being made, affordability and accessibility, I think I will again reiterate another theme of awareness. Only 27% people are aware of any form of life insurance in the rural areas. And this number, by the way, in large cities will be a very robust number. My sense, again, will be 60, 70%. So the awareness is very small, and we will have to do a lot of work to teach people, to make them aware that this is indeed a very important product in the lives of everybody.
Mayank, coming to you, health insurance, I guess, will be the biggest contributor towards this 2047 target. Now, one very important thing which the general insurance industry and the health insurance industry did was to take it upon itself to implement cashless for all at all hospitals. As of now, the feedback that we get is that it's still, yet to be enforced in the smoothest possible way. I want to understand from you, what are the troubles that you're facing in implementing cashless for all everywhere at this point of time? And one suggestion, and if I could have your view on that, would it be better to enforce this in the regulation itself so that it can be implemented by force directly?
The whole effort right now with the industry is making 100% cashless anywhere. I think it's in the very early stages. There's a whole ecosystem of hospitals, and hospitals are of different categories, large, small. Not all of them are necessarily have the tech architecture to kind of necessarily be able to kind of use the current facility of 100% cashless. I think one of the biggest enablers to this will be when the health claims exchange comes in, because in that process, the whole, getting all the hospitals onto a common platform, and all the insurance companies onto that common pipe, which is how, again, in more mature countries, this whole claims process works, will be a big shift. But to your question on whether it should be mandated, I mean, if you ask me, ideally it should be done.
Prasun, to come to you and, regarding the various very recent reforms from the regulator on the health insurance space, they've spoken about cashless claims within 3 hours, pre-existing diseases cut to 3 years from 5 years, no limitations on Ayush treatments, along with a long list of reforms that they see. I want to understand from you, as the health insurance industry, do you think it is going to be possible to sort of implement all these very, very strict and time-bound reforms? Is there any sort of, resistance to any of these reforms? And how do you think this will eventually help policyholders?
You see, the biggest problem of health insurance industry that the industry is facing is really the trust. That how do you basically build trust? And I personally believe that anything that leads to better customer experience, now whether it is 5-year moratorium or whether it is the waiting period coming down to 3 years, or within 1 hour you have to give a cashless approval, settlement within 3 hours. These are all pro-customer moves, and it will really drive trust in the overall scheme of things in customers' mind. I think the insurance industry, at least the health insurance industry, through the digital technology and all the other, stuff that we have been able to do, I think we are pretty confident that some of these steps, it would be quite okay for us to basically implement it. Obviously, the regulator has given some time to ensure that our technology platform and everything is upgraded to manage some of these regulatory changes. But I personally welcome all these changes, because this will drive better customer trust, and therefore the overall pie of insurance, if it goes up, then obviously the issue of fraud, abuse, and some of the other stuff that we are thinking of will be able to manage.
The surrender value, as per the final regulations, has been kept at a much higher and an elevated level. What I want to understand from you, do you think a higher surrender value technically would mean in some context that it would encourage more surrenders if people are getting to derive a higher value out of their surrenders?
I personally don't think so. And I think the attempt which has been made is to ensure that not only the maturing policyholders, but also people who are, for some reason, leaving midway, also are beneficiary of this product. And I think it's a very welcome move, and it is going to help the customers. And I think it will create more trust because these are very long-term contracts, and it is quite possible that because of financial difficulty, family difficulty, one may have to exit or go out of the policy, and the regulator is trying to ensure that the reasonable rewards are there for all set of policyholders to participate. I think it's a very important product category, and it comes with life coverage, and that's the main ingredient of a policy. So my sense is perhaps the attractiveness of the product will increase because more and more people will be able to buy it. At the same time, I'm not expecting that there'll be major impact on persistency or people leaving because surrender values are high.
Well, Anup, coming to you with the same question, Prashant, of course, thinks that it would not encourage surrender value. Rather, it would increase the attractiveness of these products. I want to understand from you two things. One, the main intention or a very important intention has been to cut down mis-selling. Do you think this is a very important move in that direction where mis-selling would significantly come down with higher surrender values? And B, as the life insurance industry, do you think it will have the capability to sort of deliver on this higher surrender value? Are you confident of that?
I think all of us are confident that higher surrender value, anything which is good for the customer, does expand the market. And I will draw upon experiences from other sectors as well. Be it banking sector, be it insurance, mutual fund sector. Wherever such a thing has happened, it has expanded the market. I would say that surrender value has come into the focus, but in the same regulation, there are many other things which are very, very pro customers. We have the customer information sheet, which is mandatory now. So there is much more transparency, because one of the top reasons which comes when we did our survey is about the complexity of the product and the fact that customers don't really understand the product. So there is also a lack of information. With customer information sheet, that goes away. Then the whole thing is about compulsory loan against policy. That is also very useful, because if you have a temporary liquidity issue, you can take a loan against the policy and you still have the benefit of the cover that you have. Third, you have the insurance, which is compulsory the moment it gets into DMAT, then it gets into the consolidated account statements. And to that extent, again, customers get to know. I feel that the surrender value increase will have to make sure that the whole thing about the manufacturing insurance companies and distributors, there might be some rejig, but it is very, very good for the customers, and anything which is good for the customer does expand the market.
On that note, let's take a very short break, all about insurance, with a lot more coming up on the other side. Mayank, a bit on health insurance. The industry, for as long as I can remember, has been asking for a GST cut to about 12% from the current 18%, representations being made. How confident are you that this cut is around the corner and we could soon hear something on this one? And if this indeed comes through, how important or how crucial would it be, according to you, to sort of expand that coverage from the cost benefit point of view?
I think there is a very strong case that has been built by the council. To our understanding, the regulator is also kind of blessed this proposal of ours. So I'm hoping, and on behalf of the industry, that this does go through. And I think this will help in many ways, because in fact, our thought is that 12% should be the general view. If you ask me personally, from my organization's perspective, I think there are segments of consumers where the GST could be even thought of at a slightly lower rate, like for senior citizens, or for some part of the missing middle, which we have constantly spoken about, where affordability becomes a very important part. So if we segment the entire population and say, which is the segment where affordability is a much deeper issue, there, GST cut, apart from many other things that can be thought through of bring down the healthcare costs, etc., also should be thought through. And so therefore, GST cut should not be seen as a standalone, approach, Yash. I think we should see what are the other levers to make the products more affordable, and GST is one of them. And bringing down to 12% will definitely play a big role in kind of giving a message, because whatever is your premium, 18% straight away gets added to that. And it's not going to the insurance company. So I think there is an opportunity for that. But as I said, there could be segments where we can actually bring it down further. And the other element is, can we work to bring down the cost of healthcare itself, for some segments like senior citizens, missing middle, where we think that leveraging the entire Ayushman Bharat kind of ecosystem, the technology infrastructure, the whole network, etc., in a way that can be leveraged to make the overall cost of the product much lower, because ultimately the bulk of the premium goes towards the health cost. and that will help in making products more affordable, which is what one of the big objective is for us as an industry.
Very quickly to you, Prashant, since we're talking about cost on the health insurance side, on the life insurance side, do you think making life insurance cheaper or making it more economical plays a big role in expanding the coverage? Do you subscribe to that thought?
Yeah, I completely agree with that. It depends on the segment, actually. So, for example, a marginal change to me, for example, say, for some reason, the term prices go up by 3 or 4%. For a large majority of people in India, pricing plays a big role. Affordability plays a big role. So, if we were to go with same products that we are carrying for, like we're doing right now, to smaller cities, to villages, that's not going to work. I don't think people will be able to buy. You asked the question coverage, but I'm trying to answer more on penetration. I think for penetration, it is very important to make the product more economical, more affordable. And I think the Bima Vistar product, which is coming up, which is like a bundle product design, we are targeting to ensure that the price is affordable. It's something that somebody who is earning quite low can also buy. And, that's the step in the right direction. Earlier Anup was talking and I talked about what to increase penetration and realize the vision of 2047. I think pricing of the product, simplicity of the product will go a long way in ensuring that the penetration is going up. In terms of coverage, honestly, to the segments that we're going to, marginal changes don't play a big role in terms of increasing or reducing demand.
Well, absolutely. Prasun, I want to understand from you the next big thing in the insurance space, both life and general, would be the Bima Trinity. Beasugam, Bima Vistar, Bima Vahak. In your understanding, how do you see this Trinity? How important would it be to at least give Bharat, in that sense, that basic insurance cover on all aspects?
Beasugam could give you the answer for a lot of issues, which will make insurance far more, relevant for the customer and sustainable for the industry. I think this online platform is really backed by the regulator, the Life Insurance, the General Insurance Council, will allow individuals to fulfill their insurance needs, right from buying, servicing to claim, settlement, and many more. Obviously, coming specific to the question, this will obviously drive insurance penetration in Bharat because, some of these simpler products where cost of distribution, has to be lower to bring in affordability. I think Beasugam could be a very important platform to have a low-cost distribution to reach out to the hinterland of this country.
Anup and Prashant both, I want to ask you one question. How do life insurance companies like yours, two large companies, promote term life or protection insurance before anything else? If I had to ask you this thing in one straight sentence, why do you think, how would you put it, that life insurance or term life insurance, to be specific, before anything else?
I think if we were to look at term insurance, there are a couple of things. It's a pure risk product. And so more and more ecosystem that develops around managing risk, it will really be very useful for term insurance to penetrate higher. And just to give you a sense, on 25,000 rupees, when you get a crore, you're talking of 1 rupee is 400 rupees cover for a rupee. The anxiety is not just pure life. The anxiety is also around critical illness. I have seen in my own experience that the highest level of personal bankruptcy does not happen because of loss of business, etc. It happens because of health, and particularly critical health, because the costs are very high. So those riders which come very inexpensive.
Prashant, if a policyholder is asking you why term insurance, what would be that first and the only line that you would tell him?
That's the purpose of life insurance. Actually, if you ask me, the one reason why life insurance industry should exist, it is about providing insurance against life, right? So that's the main purpose. But I will like to call out a couple of impediments that come in the way, actually. Yes, I think awareness is a big reason. And many times, even in recent past, because India is not a very rich country, people have this question saying, if I keep paying the premium, what am I going to get in return? While we have tried to service that request by return of premium kind of design, of course, that comes as more expensive than pure term policy. I think we need to create more and more awareness about the need for term insurance. The other one is coverage. Many people actually buy life insurance, but the coverage is small. Again, referring to the same survey that I was talking about, when we talk to our customers who have life insurance cover, when the question is asked saying, do you think this cover is good enough to take care of your life if something were to happen to you? Only 50% of the people say yes, which means it's an issue of awareness. It's an issue of how large the coverage has to be. And I think we need to continuously work on it.
Absolutely. One final question as we conclude this important discussion on India's insurance sector. Since we are very close to the union budget, I would throw open this question to all the panelists here. What would be that strictly one single demand that each one of you would have from the union budget, which is very close to us at this point of time, starting with Mayank?
GST is definitely an important ask, but if I can ask just one more. If there's a way we can bring in the healthcare sector, to be in some way regulated or nuanced to kind of really work with the industry towards the objective, I think it will help a long way in making health insurance for all by 2047 happen.
Correct. Prasun, to you.
So actually just add to one more thing. One is obviously GST and the way Mayank has said segmented GST. Let's not look at 12% for everybody. It could be 0.5 for some people as well, depending on affordability. Number two is really a healthcare regulator and in what form and shape that is possible. And the third is really the National Health Policy has proposed an increase in public expenditure, as all of you know, to 2.5% of GDP by 2025. And therefore, the journey towards that, I think, is very critical because, and therefore the union budget has to really put the path and should give a better understanding than what we saw in the interim budget in terms of the healthcare spend on the percentage of GDP. So these are the three things that I would say here.
Correct. Prashant, on the life insurance side from your end?
Yeah, I'm not going to count GST, though, GST on protection has been a long-term demand because budget actually focuses on tax. But I will say the other element that we didn't discuss much today was retirement, the pension. And it has been a request to bring the pension products at par with at least the 80 CCD benefit, which is available to NPS. I think that will be a good step and it will promote and increase the penetration of retirement.
Perfect. Retirement and pension. Anup, final word to you. Demand from the union budget?
See, Viksit Bharat cannot happen if we don't have social security. So social security comes in the form of protection. Social security also comes in the form of retirement. And on both, I think from a union budget perspective, not from an ecosystem perspective, we require a different section. For health, we already have ETD. For housing, you have a different exemption. So we have been very carefully thought about. For savings, we have a different section. I think for pure protection, we now require a separate section. That is number one. And number two, for retirement, because these are locked up products and locked up products create social security, compounds money over a long period of time. And to that extent, some incentive for people to really save and invest for long periods of time without full liquidity, because which is very important. Otherwise, people just redeem and move on, as we have seen in other sectors, is critical. So some incentive on retirement and some incentive on GST incentive on protection and a separate section, maybe for 50,000 of premium. It's not for sort of very high premium, but maybe for 30,000, 50,000, up to 50,000 premium per year. If we get that, then affordability really comes into the play and the market explodes. And on parallel, when the ecosystem also comes in to manage risk, reinsurers will also come in and that will really explode the market and create big sector.
Well, thank you so much. I hope the message from all four of you, Anup, Prashant, Prasun and Mayank, does go to the finance minister in terms of the requirements. Thank you so much for joining us today and discussing what's really transpired over the previous 1 year in the insurance sector, and more importantly, what's waiting to be transpired. With that, it's an end to this special programming. Thank you so much for joining us.